everyone. Very warm good evening and a warm welcome to all those who have joined us today. We have a very interesting session lined up along with WazirX. It's all about crypto compliance and whatever queries our taxpayers are in. People who come and file with us have been having. So we got folks from WazirX to help us out with addressing those queries and also to update you on what's going on in terms of crypto compliance, how to file your tax returns for the year for which the due date is 31st July. It's coming up in a few days. Let's get started quickly. Just to introduce the panelists, I have Mr. Iyer. He's legal and compliance head at WazirX. He's a financial services professional with more than 2 decades of experience in the securities market in the areas of compliance. Thank you so much, Mr. Iyer, for joining in. It's a pleasure to host you. I think you're on mute, sir. Okay, we couldn't hear you. I think you're on mute. Okay, we have somehow I'm not able to hear him. All right. I also have Sumit with me, Sumit Patel. Hi, Sumit. He's a customer happiness manager at WazirX. He's an old hand at WazirX. He's been around since day one, and he integrates tech and support ops to make customer experience superior. Welcome, Sumit. Thank you for joining us.
Thanks, Ravina. Hi, everyone. Glad to be part of this amazing session. And I hope that we will definitely answer most of the queries that you have related to taxation and any other things related to TDS.
Sure. And quickly, I'll introduce myself. I'm Preeti Khurana. I'm a chartered accountant. I'm with Clear. I've been with Clear since a long time, since 2014. And let's move on to the discussion for today. Okay, so today we are going to talk about how to calculate and pay income tax on crypto gains for financial year 2021-22. This is extremely relevant right now because we are filing our tax returns. Our tax returns are due on 31st of July. If you don't file by 31st July, you'll end up paying a penalty of rupees 5,000, which could be 1,000 for those who have income up to rupees 5 lakhs. But most of us who have income beyond rupees 5 lakhs, if you don't finish your compliance by 31st July, you will pay a penalty. So today we are going to talk about how are we going to pay taxes on the gains which we had in the previous financial year. Also, we'll discuss some recent regulatory changes. We'll talk about things to keep in mind when we are filing our income tax return. We'll talk about how clear tax can help, and both Mr. Iyer and Sumit will help us with understanding how we can get the relevant details from WazirX, how WazirX can help us prepare our tax returns, and how clear tax can help. We'll talk about it. We'll also go over some compliances which may be required for financial year 22-23, which is the ongoing financial year. And as all of you may already know, that for this particular financial year, the TDS compliance has kicked in, and there are several aspects to it which we must ensure to comply with. So we'll go over those as well. Uh, just quickly beginning, coming to the topic, reporting crypto income for financial year 21-22. Now, interestingly, when the budget was announced for the new financial year, there was a crypto taxation law or rules which were placed into the Income Tax Act. However, these became applicable from 1st April 22, and so taxpayers had this question: what should we do about all the gains and income we earned in the previous financial year for which the returns are being filed? Now, to be very frank with you, even though the laws apply from this financial year, but it would make a lot of sense to actually just sort of do the same thing for the previous financial year as well, because now you have an understanding of how taxes have to be paid, how these have to be reported, and therefore, once that understanding has been developed, even though it has been made applicable from the next financial year, it would make a lot of sense to do the same for financial year 21-22. However, a lot of investors, taxpayers actually came up to us saying that, what if they continue to report? So they have been reporting this as business income or as capital gains when there was not enough clarity as to what one should do. And, they've been wondering if they can continue with the same practice. Now, in this scenario, a lot of taxpayers were booking or reporting as capital gains, where they assumed a 3-year time period to be applicable for long-term gains, and tax to be applicable at 20% with taxation, with indexation, and uh, for short-term gains, tax to be paid at regular slab rates. Now, this is an approach that you can choose to apply because, like we discussed, the budget only made the laws applicable from 1st April 22. So, in scenarios where you may have just a handful of transactions or you don't have significant tax liability, it may actually, it's a judgment call that you need to take. Also, interestingly, a lot of people reported this as business income. So, if you had heavy number of trades, if you had large volumes, if you had greater frequency, then taxpayers have been reporting this as business income, and they've been claiming expenses also. So, under the Income Tax Act, if you report any income as business income, you're allowed to, adjust expenses related to that business while reporting the income. So some taxpayers have been doing that, and they want to continue the same practice for financial year 21-22. Now, this is actually, it's a very tricky situation to be in, because there are laws that apply from the next financial year which clearly specify tax has to be paid at the rate of 30%, no deductions to be allowed except the cost of acquisition, and also there are rules around setting off losses. Now, in the presence of awareness of these kind of laws, it's literally a judgment call that you'll have to take as to what you want to do for the previous financial year. Some may choose to report as capital gains, some may choose to report as business income, while others may actually, apply the laws which are applicable from this year, which is reporting them under income from other sources and paying the 30% tax rate. That would be the safest thing to do. Doing anything else may run you the risk of sort of, getting a notice or from the department, or perhaps your chartered accountant will have to spend a lot more time figuring out which of these two methods would suit you most. So yeah, I mean, broadly, this is, the what the scenario looks like. And for each one of you, I would encourage you to actually look at your transaction statements, look at what you've been doing, what are the number of transactions you've had, what is the volume of transactions that you've gone through, and accordingly make that decision, take that call of as to how you want to report this. However, don't make the mistake of ignoring to report this income and paying tax on it. I think that's very, very important. Completely removing these kind of details from your income tax return would not be a wise thing to do. Also, some people reached out to us asking if there is a special section where they can report crypto income. As some of you may know, there are sections for reporting business income, capital gains from stocks, shares, sale of land, building assets, other types of assets. But so far, there is nothing specific in the tax returns, which no specific schedule, no specific reporting that has been included so far. There is no section where you've been asked to do this kind of reporting. Therefore, this is something that you will take in the others section in whichever area you choose to report it. All right. Coming to recent changes, especially related to TDS. Now, in the budget, the finance minister introduced Section 194S for TDS on transfer of virtual digital assets. Instead of calling them cryptocurrencies, they've actually chosen a much wider definition, which is virtual digital assets. Now, what they've said is that TDS at the rate of 1% will be applicable on the consideration that you pay on sale of virtual digital assets. What this means is, just to sort of super simplify it, we can understand it just the way salary TDS works. Now, we all are employed, our employers pay a salary, and before making the payment to us, before crediting the salary to our account, they deduct certain money as TDS and go and deposit it with the government. So practically the same thing will happen before you make the payment to the seller, whoever is the seller. You will ensure that TDS has been deposited with the government, which has to be 1% of the consideration that you're going to pay to the seller. Now, this is actually effective from 1st of July, and the government has specified certain thresholds, which is, if you are a resident and you meet certain criteria, then if your aggregate transaction value is within rupees 10,000, this won't apply to you. And in other cases, details have been specified where this threshold is 50,000. Now, just to specify, even though TDS regulations kick in from 1st July 22, Yet the, when you're testing for the threshold, it becomes applicable from 1st April. So you have to look at transactions from April 1st April 22 till 31st March 23, and if they exceed this 10,000 or 50,000 threshold, then you have to comply with the TDS regulations. Now, there are various scenarios with respect to TDS deductions. So, of course, it's not as simple as we thought. And what the government has done with introducing this new circular, this new information around how you're going to deduct TDS is that they've specified in detail. Earlier, there was a lot of confusion as to whether peer-to-peer transactions, whether exchange of one BDA for another will attract TDS and these compliances. But they've clarified that even exchange of VDA for VDA or exchange in kind will attract TDS regulations. Now, if you're directly dealing with someone and making a crypto transfer, and there is a buyer and a seller involved, and you're not doing this through an exchange, then of course the direct onus of ensuring that you deduct TDS will be the responsibility of the buyer. So you'll have to ensure that you're deducting TDS at 1%, you have the PAN number, you have all the details you need, and you deduct and deposit it with the government. For any transactions that happen through the crypto exchanges like WazirX, there is more clarity here. If these are made through exchanges, then the exchange will ensure that TDS is adequately deducted and deposited on your behalf, on the buyer's behalf with the government. Now, there are several scenarios, where you're exchanging virtual digital assets in kind. So what you're doing is either you are exchanging an asset for an asset. In such a case, there will be a deduction. There will be TDS deducted, and that has to be done in the currency itself. So let's say if you're exchanging one currency for another, uh, there will be two buy transactions and two sell transactions. Therefore, there will be two TDS transactions that will happen. The exchange will make the deduction, and then there are a set of compliances that exchanges have been asked to do, which is pretty onerous, no doubt. They will have to sort of ensure that TDS, whatever is deducted in the virtual digital asset, has been converted to, if it's in a non-primary VDA. So they've also gone ahead and specified that there are certain primary VDAs, which they're calling, Bitcoin, Ethereum, there is USDC and USDT. Those four are being considered as primary VDAs. If TDS has been deducted in terms of the currency itself, in any of the currencies other than these primary ones, other than Bitcoin, Ethereum, USDT, and USDC, then the exchange has to deduct and also convert to the primary VDA. So there are, I'm not going deeper into these compliances, and probably Mr. Iyer can help us here. So there is a sort of a detailed compliance that needs to happen via the exchange. But essentially, as somebody who's transacting on these exchanges, I think what changes you will see is that you will see details of what TDS has been deducted and deposited to the government. And you will, if you're receiving consideration, that will be net of TDS. You may also receive certain contract notes information as to how much was deducted, how much was deposited, and perhaps you will see these transactions also reflecting in your Form 26AS for financial year 22-23. So largely these are the kind of changes that you will see. Now, coming to, so Mr. Iyer, Sumit, would you like to add anything around this here?
Um, for the song, we are unable to hear you.
So if you just remove your headphones, I think it should be okay. No,
Not yet.
there is a button at the bottom. Is that muted? The green button next to your camera button. No.
Not yet. I think you can rejoin. Hopefully that should solve it. Cool. Cool. So in the meanwhile, regarding to the all the information about the TDS and how much deductions are happening from WazirX exchange, right? All those information is something that we actually share it in the trade reports as well. So whenever the user is downloading their trade reports, this is something which I'm going to showcase in some time as well. So all the trades which has happened from the user's account after 1st of July, we have like a TDS column as well available, which will show how much TDS has been deducted from the exchange or from the user's account basically. So all those details will be available in the trade report.
Right. Wonderful. Thanks, Sumit. Yeah, I think it would be super helpful for people to understand, and Sumit is going to walk us through, how we can view these details on WazirX in a short while. Moving on
Mhm.
to, things to keep in mind when you're filing your income tax return. So, would you like to add anything around TDS?
Is my voice audible now?
Yes, perfect.
Yes.
Yeah. So the challenge with at least India's regulatory regime is that the uh, virtual digital assets, though they have been coined as a term for crypto assets have not been slotted in a particular category. Neither they have been termed as currency, nor they have been termed as security, nor they have been termed as commodity. Which actually internationally, if you see, some jurisdictions have classified crypto into these kind of assets. So there is sufficient clarity in as much as how the tax filing needs to be done, because when you have this asset slotted particularly in a category, then there are actually extent slabs which are there for filing income tax, and how much is the tax to be paid and how much the tax to be withheld and all those aspects. So on account of this non slotting of the crypto in a particular asset class, there is this kind of a a mixed kind of an interpretation of what should be the tax liability on transfer of VDAs.
Right. Thanks for that input, sir. So, coming to things to keep in mind while filing income tax return. Now, a lot of taxpayers are confused around how they should do their tax filing compliance, which income tax return they should file, and how to seek help. So, just to share with you that when you're filing on clear tax, you don't need to worry about which income tax ITR form to choose, because we do that automatically based on the details that you provided us. So, while you're in the filing flow on ClearTax, if you input any sale of capital assets, or if you report business income, then the applicable return form is automatically made available to you from the back end. You don't need to worry about it at all. And of course, when you file, you will know which ITR form you have filed, that you will be told on the platform itself. Another suggestion that I would make is, that it's very important to consider choosing an expert before filing your tax return with crypto income. Like we discussed, for this financial year, we may have to report it only as, other sources, and pay 30% tax on it, and only reduce cost of acquisition, which has been allowed as per the latest rules. But for the previous financial year, some of you may choose to report as capital gains or as business income. And in such a scenario, an expert can guide you as to what would be the most suitable method for you. If you have a large volume, or if you've been reporting in a certain fashion, then it may be sort of wise to, report it consistently, and do the same as you have done in the previous years for financial year 21-22. If you want to report as capital gains, perhaps that's a call that you may need to take, along with, developing an understanding from the expert. uh, at any time, you feel like choosing an expert, you can come to the clear tax filing flow. You can opt to hire an expert. An expert will be there with you to assist you. Also, you can ask for a transaction statement from your crypto exchange. I think that's a very important step, and Bazirex is just going to help us understand that. It would make help. It would be useful to actually keep a detailed record of all of this. You don't need to maintain paper records. If you have electronic records, you have files, you have downloads from Bazirex, and you've, maintained a certain detail around what are your crypto transactions. What have been the sale purchases, and what are the various sources of income that you've used to deploy to investing towards crypto. I think that would be a good amount of documentation that you can maintain when you're filing your tax return. Sumit, would you like to add anything here?
Definitely, I'll be showcasing how you can download your trade reports, which will have like all the information along with the exchange trades, along with the TDS information as well, We also have like different sheets available within the report so that all the data is like accumulated within one Excel file itself, which is going to help you out in filing your taxes. So I can proceed with sharing the details now if you want.
Sure.
Okay, I'm just sharing my screen. All right. I hope you guys are able to see my screen now.
Yes.
Cool. So this is the WazirX homepage basically. So over here we have like the account settings option. So on the top right side, you can click on the account settings. And over here, there is an option called as download reports. So this is going to be like the same process for the mobile application as well. We have the account settings option in the mobile. It is available on the top left hand side corner, and later which you will be able to see an option called as trading and fees, or you'll be able to see a direct option of download reports. You can later click on trading reports option available over here. We have a drop down which has like a sufficient time period and timelines mentioned over here. For example, if we want to like just download for the financial year 21-22, we can select that. And we can also select what all things we want in the reports. So exchange trades, P2P trades, OTC, deposit withdrawals, all these details can be added to the trading reports, which can be downloaded from the settings. So I'm going to select everything over here, and I'm going to raise a request. All right. So we can see that we are preparing your report and then email will be sent to you shortly. So you have to wait for some time. I believe it would take like maximum 5 to 10 minutes, and you should receive the email, and later which you will be able to see or report something like this. So this particular report will be delivered to you in your mailbox as an attachment. And over here, you will be able to see multiple details, basically what all details you had selected. For example, exchange rate, P2P trades, all these things will be available in this report. So over here, we can see that we have like multiple sheets available within the trade report, which has been generated for you. Within the exchange trades, you will be able to find all the details about the trading that you have done on the platform. It includes all the markets. So it includes the INR market, it includes the crypto to crypto market, all the buy sell trades, at what trade the trade was executed. All these details are available over here. We can also see the TDS also. At the very moment, this particular report was for the financial year 21-22. So that is the reason why the TDS is not added. But if you generate the report after 1st of July, this particular TDS details will also be visible in the report. So if you want to like filter out the report later, you can actually filter out as per the INR markets itself, or if you want to like filter out as per the crypto to crypto, then you can just use the filter options and you can filter out the markets. If you want to just check for the crypto to crypto, then also you can do that. Just filter out the markets based on the USDT market pair, or if you want to filter out by BTC or WRX market pair, you will be able to do that from the Excel options or currently which I'm using, that is Google Sheets. Same way, we also have like P2P trades as well. So in P2P trades as well, the TDS is getting deducted. So we have those particular details available over here as well. In P2P, currently the P2P is for the USDT INR market only. So you will be able to find the complete details about the price, volumes, what was the total amount basically, and what was the order type, that is buy and sell. Same way, we also have like OTC trades. This is going to be like for the very limited users basically. If you have done any OTC trading, then this is something that you will be able to see. Then we also have like deposits and withdrawals sheet. In this particular sheet, you will be able to find all the information about the deposits and withdrawals you have done in INR, in crypto. Both the things are combined over here. And if you want to just filter it down to just INR, you can just apply the filter and just select the asset as INR over here. Later which you will be able to find all the details about the INR deposits and withdrawals that you have done in your account. Similarly, if you want to filter it down to like per crypto level, then you can actually select any of the cryptos. Means, if you want to just search for like Ethereum, then you can click on Ethereum and you'll be able to find the details for that particular crypto. All right. Then we also have like additional transfers. This is something which includes your referral benefits or like any other transfers apart from the deposit and withdrawals, which happens on your account. For example, like if you are earning some referral commission, right? So all those details are added over here. You'll be able to see okay, how much referral commissions you are earning, and these details are visible in this particular sheet. We can go to the right and we'll be able to see more information. Then it is account balances. Like whenever you are generating the report, right? As on that date, you will be able to see what is the account balance. We have STF trades. STF trades is also for the few selected users who have done the STF query. Then all those details will be visible over here. We also have like Binance to WazirX internal transfers. So WazirX does have a mechanism where you can actually connect your WazirX and Binance accounts, and later you can do the transactions for nominal fees. So any transfer that you have done between WazirX and Binance account, basically these are the deposits and withdrawals only between WazirX and Binance, and you will be able to see all those information over here as well. Apart from that, we also have account ledger. So all the sheets which were there like earlier, all these sheets basically accounting accounts to an account ledger basically. So account ledger is something where like for each particular asset, right? What has happened? Like basically, if there is an income, if there is an expense, all those details are visible in the account ledger. So this is something which is going to be helpful. Like if you want to just check like how much balance you're holding and how much was the exact fees charged, all these details are also available over here. It is basically kind of like a replica of all the things which are happening in your account. So this is the general overview of all the things that we capture and or we share in the trading statement that you generate from your WazirX account. You can generate the report from web as well. You can generate the report from the application as well, and the report will get delivered to you within 5 to 10 minutes.
Right, wonderful, Sumit. If you could just stay on that sheet for a minute, please.
Mhm.
Thanks for for explaining how to do this. Interesting that it can be downloaded from both your portal as well as the app. Now, so I see there are certain deposits which are non
Mhm.
INR. These are deposits made to the wallet. Could be maybe people have they could be
The-
these could be airdrops or folks. Are they of that nature?
No, these deposits are the crypto deposits basically. So, for
Okay,
example, if a user is depositing crypto, for example, in this particular case, XRP, right? So, this is the withdrawal transaction. But if I just check any other deposit, so WRX, all right. So, if I'm depositing WRX from any other exchange or from my other wallet, which is outside WazirX, right? So, I'm
right,
depositing those WRX from like another platform into my WazirX account. Those details are visible over here. So
right.
this
Got
particular deposits and withdrawals combines all the crypto deposits, all the crypto withdrawals, and also all the INR deposits and withdrawals.
Got it. All right. So, I assume for investors, taxpayers who are moving currencies from their own wallet to, outside of WazirX to their wallet at WazirX or vice versa, there is no tax implication because this is between your own wallets, right?
Correct. Correct. Yes.
Right. And all the P2P trades are all your peer to peer transactions, which now will attract TDS. And, in terms of taxation as well, these may have to be looked at. If there are any gains that you want to report for financial year 21-22. So I hope this has been helpful to all our listeners. They are able to download these reports because when you're coming to ClearTax and you're filing it, an expert may help you understand and will calculate your tax dues from this particular report. Great. Thanks, Sumit. I'm coming back to my slide here. All right. So, how ClearTax can help. So, if you are doing your compliance, if you're doing your ITR filing for crypto gains for financial year 21-22, ClearTax can help you choose the correct ITR format. As I explained, that you don't have to worry about selecting whether it is ITR 2 or ITR 3 or which of the ITRs you should file. We do that at the back end. We also make suggestions for claiming all the deductions that are applicable to you. Besides all of this, you can upload your Form 26AS. You can choose the pre-fill option. So now there is a pre-fill option, which just at click of a button within a few seconds, we can populate all the various income heads under your tax return. If you have, say, capital gains, you can upload statements from Zerodha, Carvi, CAMS, all of that, and your capital gains will be calculated. If you have certain interest income, which is available in your Form 26AS or your annual information statement, which is AIS, those are pre-populated, pre-filled into your ITR. So it actually sort of really simplifies the effort that you need to put in when you're filing your tax returns. In terms of crypto, we will help you out for resolution of all queries from the department. There's going to be a dedicated tax expert and your account manager. And of course, we'll help advise you on the best tax saving option for the upcoming financial year, because filing for 21-22, you can no longer claim any fresh deductions. Whatever investments you have made in the past year, we can check their eligibility for claiming a deduction for 21-22. And of course, whatever queries you have, if you received any notices, we can help you address all of that. Now, coming to understanding compliance for crypto transaction for 22-23, I think this is also extremely relevant for investors to understand what all they need to do for the ongoing financial year, because now there is a tax law in place. Now there are tedious regulations to be complied with. So first and foremost, it's already July, and the first advance tax installment has fallen due sometime in June. So you need to understand what are the implications of advance tax. Now this essentially means advance tax requires you to estimate your annual income for the entire financial year, for the ongoing financial year, and pay taxes in quarterly installments. And a certain percentage of tax falls due on a certain date, and you need to sort of estimate your annual income and deposit advance tax. Now, therefore, you need to do that kind of an assessment on a quarterly basis. If you're capable of doing this, that would be awesome. Or you can seek help from us. You need to ensure you are deducting TDS on any crypto transfers. If you're dealing with an exchange, of course, they will take care of their side of the compliance, because if you look at the recent circular, large onus of compliance has been placed on exchanges, and there are several aspects of deduction of TDS that the exchanges will take care of. Saya, would you like to chime in on that? Like, how what are the various TDS compliances that Wazirex will take care of?
In fact, as an exchange, the circular which came in June 2022 clearly defines what is an exchange, what is a broker, and it also defines the circumstances where the broker would be filing the taxes, and about the exchange will file the taxes and the broker will file the taxes. So it will be a different situations where the client approaches the exchange through the broker. So for the exchange, it is a broker who is transacting, and vice versa. So the as far as the transactions on the exchange are concerned, we have actually systems, because we recognize each transaction to the KYC of the client, to the PAN of the respective client. So whatever we deduct and we report, it's clearly captured in the system. And on the this is as far as selling of VDAs are concerned. When there is a transfer of VDA, that is when I sell a particular VDA in exchange of another VDA, there are actually, which was highlighted earlier also, that there are four legs of the transaction. So technically there are two buyers involved, and hence the person who is actually going to credit the sale proceeds has to withhold the tax and um pay the resultant proceeds to the seller. So we have actually input mechanisms on to ensure that all the client's transactions adequate withholding is done and taxes are paid. And we also have to file actually client wise reports of what is the taxes withheld, what are the transaction records, and what is the total withholding done at the exchange and paid to the. So we have to clear onus, at least whatever, if I have to cut it short, whatever transactions are done through the exchange platform, the clear demarcation and role clarity has been established in the circular on how to pay the tax. So as long as your transactions are routed through the exchange, you need not worry, because we have systems in place to ensure compliance of those rules, and we also have to diligently follow the procedure. It's only when the transaction is outside the exchange platform is where the onus gets cast on the respective
Absolutely.
buyer and seller. So
Right.
it would actually, I would definitely go into further details, but it would be more technical for this discussion. But if the transactions are routed on a platform, exchange platform, then all kinds of data and information is available for the authorities as well as the customers to determine what is the tax liability and what is the tax deducted and what is the turnover, transaction, profit, gain, loss statement, everything.
Right. Wonderful. So coming back to these compliances, exchanges are even required to furnish a quarterly statement. I think that's Form 26 QF before the specified due date. So there is a due date specified by which This quarterly statement has to be submitted by them, and these statements will have all the details of transactions that have been executed on the exchange, and they will start to appear in your Form 26AS, because these are all linked to your PAN number, which is what the exchanges already comply with. Once you register, you're supposed to share your PAN number, and once these appear in your Form 26AS is when the onus then comes on to you to do the rest of the compliance, which is paying advance taxes and ensuring you're reporting all these tedious transactions while filing your tax return. And all of these then come into the picture. Also, investors may have to be careful when they are, as Mr. Iyer already mentioned, if you're transacting outside the exchange, is when the onus will be on the buyer to do the full scale of compliance, which is deduct TDS appropriately and then go and deposit it with the government. Also, the person who's deducting TDS under this section are for cryptocurrencies, for consideration paid for cryptocurrencies, will have to issue a TDS certificate, which is Form 16E, E for elephant. Just in the same way we have Form 16 for salary TDS, we have 16A for when you have interest or from fixed deposits, then your bank will issue a Form 16A to you. Now there is a Form 16E, which will be issued by the person who's making the deduction to the person on whose behalf like TDS has been deducted. And this certificate, there is a certain timeline by which this has to be issued. Now, once the seller initiates a transaction, he or she will receive the net consideration, which will be credited to their wallet. A lot of investors and taxpayers ask us this question, that will they have to again pay tax when they withdraw from their bank account, or they withdraw from the wallet, or they move it to somewhere else. No, that does not happen. Now the TDS implication only arises when you make a sell transaction. So when you're selling, there is a TDS deduction. You receive net consideration. You receive consideration which is less 1%, because the buyer has not paid you that money, has instead gone to the government and deposited that TDS. So just that framework needs to be understood, and rest of the money movement that takes place, there is no tax involved on that. Of course, when the financial year ends, or when advance taxes fall due, is when you will estimate how much tax you need to pay. You will calculate, we can help you calculate your taxes. You will find out how much cost of acquisition you can withdraw, how to locate that cost of acquisition. There are no other expenses that you can reduce from the sale price, although there is already a lot of discussion around what essentially constitutes cost of acquisition. And if anyone who's been interested in taxes, this has been a subject of debate for other assets, or different types of assets, as well, as to what truly constitutes the cost of acquisition. So I guess there will be in due course, there will be more regulation, and there will be more clarity. Perhaps there could be a few case laws that we could look at to truly understand how to look at costs of acquisition, what to reduce from your sale price. But good thing to remember, that if you're making further withdrawals, and also when you are investing, when you're buying, essentially you will pay the full consideration, and there's no TDS implication for you. I mean, all you have to do is exchange will comply on your behalf, but you essentially don't have to do anything. You have to pay the price at which you want to buy. Now, the seller's form will show the form in Form 26AS will show all the TDS transactions which have been undertaken in the quarter, because the exchange is filing a quarterly return. So, exchange will deduct TDS, go and deposit with the government, and they will file a quarterly return. So, whenever they file, they report your PAN number, and the TDS deducted against your PAN number if you were a seller, and therefore your form, the seller's Form 26AS, will reflect all of this information. Now, when you are filing your taxes for the current financial year, is when all of these transactions will appear as TDS, and you will calculate your total tax liability. You will reduce the TDS which has already been deducted, and you will pay the net tax. If any tax is due. Now, this might sound complicated, but on Clear Tax, you can simply come and upload your Form 26AS. We'll take care of all the TDS. We'll tell you if there is any tax payable, and you can go ahead and do your compliance. But for the current financial year is when all of this comes into play. For the year which has already gone by, which is financial year 21-22, there was of course no TDS. Yet you need to figure out how you will be doing your taxes, how you will be filing your tax returns, how much tax to pay, where to report. And I think it would make a lot more sense to engage an expert to do all of this for you. All right. I just want to quickly check if there are any questions that we should be answering right now. Just one moment, please. Okay. Okay, somebody is asking, can you please explain about TDS? How could I claim TD if TDS is more than income tax? I think that should not be the scenario unless you're talking about losses. When you have a loss, then you already have some TDS deducted, but because you have a loss, you perhaps don't have to pay any tax. Now, loss is actually also a very interesting concept when it comes to cryptocurrencies, because the government has said that loss set off is allowed very specifically. Now, those of you who deal on the stock markets know that there's greater fungibility. You can set off losses, even short term losses can be set off from long term gains, and there are various permutations and combinations available. But so far as there's whatever clarity we have from the government is that you can set off loss within the same currency. So if you have loss from Ethereum and gain in Ethereum, then you can set that off. It may not be allowed between currencies. And in such a scenario, you may have TDS entries appearing in your Form 26A, yet overall you may have a loss. And therefore, you don't need to pay any tax. I think that's your question. In such a scenario, when you go and file your tax return, you will receive a refund of TDS. So, you will prepare your return, and actually, whatever tax you pay is an aggregate. So, it's an aggregate of tax on all your incomes, including salary, house property, capital gains, business, all of that. And then you calculate total tax due on it. You reduce tax which is already deposited, which is TDS, and you pay the net tax. However, if you have a loss, then of course you don't need to pay any tax. And whatever TDS is deducted will be refunded to you. And to claim a tax refund, you have to file a tax return. You have to e-file. There's no other way to claim tax refunds. Anything, Mr. Iyer, would you like to add on loss set off? Any insights that you can share around it?
No, actually, larger clarity would emerge only when there is a regulation for crypto, because presently the um, case stands today, there is crypto is a permitted business trading activity. It's just like any other investments in any kind of security or commodity or real estate, or for that matter anything to do with investments. However, it has not been slotted in a particular regulation. So till the time clearer regulations don't come up, the set of the flexibility in set off like we have in commodities, equity futures, derivatives, that would come only through more proper regulation. Because at this stage it's an unregulated product, and therefore to the best possible manner the stage wise regulation is coming up. So the set off presently is allowed only within the same crypto asset.
Right. Wonderful. Also, Sumit and Mr. Iyer, like whoever one of you, if you can share your thoughts around, recently we heard that RBI wants crypto to be banned. And now, any thoughts that you have around this statement, and what would you think of it?
Okay. The latest statement from the finance ministry, in fact, conveys a deeper meaning. If I have to just elaborate on that, the statement says that a decision on whether to how whether and how to regulate crypto or decide on banning of crypto can be taken only through proper international collaboration. So this is mainly due to the fact is there are various jurisdictions which are recognizing crypto as legal tender. For example, Canada takes it as a commodity. In US, the entities who deal in cryptocurrencies are actually regulated under the money service business. And in UK, the crypto has been likened to capital assets, making it very clear on how what should be the tax slabs. So the challenges from an India perspective, if I have to lay down, it's that the main challenge is the difference between a permissionless blockchain and a permissioned blockchain. So the fear of our regulatory authorities or our government is how to bring the decentralized setup under the control. So, and they also at the same time realize that if they have to engage in this aspect, it has to be through uh, global collaboration and looking at how the whole world is taking to crypto. Otherwise there is in terms of, at least I wouldn't say in terms of volume, but at least definitely in terms of investors, Indian investor participation in crypto is among the highest, if not the highest. So to that extent the investor interest has to also to be protected, and an outright ban also the government will not be able to enforce, because whereas if I have to talk about exchanges like WazirX or say CoinDesk or any other exchange which is operating in India, there is a clear record, and we are in fact following systems and processes of maintaining KYC and recording the transactions and having systems and processes to scrutinize the trades and maintain all books of accounts and records. So the moment the transactions are on a regulated on a proper exchange platform, everything is okay. The concern of the government stems from the fact on the decentralized exchanges, how to regulate the transactions. So I would say that at this stage, it's still under a nascent stage of where the government wants to wait and watch, and also not take an abrupt decision of banning crypto, but at the same time engage with international collaborations and try to adopt the best possible way out, which could mean even recognizing only a particular crypto, and not because as we speak there are 10,000 digital currencies which are operational across the world. So
Right.
whether to take a decision and permit all of them, whether to sub permit something, or I would say the main challenge for the government would be on the demand supply, who controls it, and how does it happen. So that's the reason they are actually promoting they are actually going to issue a discussion paper on the central digital currency, which is expected
Right.
shortly. And I would say at this stage it's still it's not banned, but it's certainly it regulation needs to come, and it would come gradually. And at least
Right.
personally I feel that it would not be an outright ban, but then it would we would actually align to other like-minded jurisdictions and take a call on how to regulate
Right.
crypto and how to permit it.
Right, wonderful. Thanks a lot, Mr. Iyer. I think that makes a lot of sense. The space is evolving. There is so much more understanding that we need to develop around, how it's going to be regulated, how taxes are going to emerge. What are, soon we will probably have a few, some jurisprudence to look at, and discussion papers around the central government's digital currency. So I think all of that will emerge, and it perhaps very interesting for crypto enthusiasts, investors, and taxpayers as well. So, thank you so much for joining in. I hope this discussion was useful for our listeners, and we'll bring to you more such sessions to help you understand how to do your tax compliance. And if you have any specific questions, to write in to us. We'd love to hear from you. Leave us a comment. And finally, thank you so much, Mr. Iyer. Sumit, thanks a lot for joining in.
My
And thanks
pleasure.
for explaining that transaction statement bit. I think that's going to be super useful. Thank you.
Thank you.
Thanks for having us here.
Thanks for having us. It was a pleasure. Thank you.